Time now for Better Money with Joel Johnson. Today's money topic, the stock market and understanding market corrections. Joel is a certified financial planner and managing partner at Johnson Brunetti. So we've been seeing the stock market, everyone celebrated when it hit 20,000, and then it also probably makes people nervous, like, oh, when's it going to go down?
Yeah, and we're going to see, I mean, the Trump administration, it's going to be an administration of volatility because nobody knows quite how to adapt with all the changes that are taking place, and uncertainty makes markets move up and down. So it's important people understand what's a correction, what's a bear market, etc.
All right, so let's talk about that. What is a market correction?
So a market correction is simply a 10% drop in the market.
Okay.
A bear market is a 20% drop.
Okay.
So there's a big difference between a market correction and a bear market. There have been 123 market corrections in the last 113 years or so. So about every year there's a market correction. You remember last year in August, things went down. I was on here at the 5 o'clock news because the market dropped 1,000 points. Where are we now? Back up again from that. If people panicked and sold.
All right, so that's good to know. It happens about once a year. So what triggers a market correction?
A lot of things. Profit selling, technical analysis, people that trade based on charts. It can be a number of different things. The bottom line is simply it's more sellers than buyers trigger a market correction. What people need to know is how to prepare for it.
All right, so then we need to know, what does a market correction mean for my investments? People know, what's it going to mean?
Yeah, and don't let your emotions take over. This is the key here. Don't get sent into a panic. Also, don't get greedy on the way back up where you sell low and then you buy after the markets move back up. It's really important people have a plan.
In the next one, you say don't let those temporary market conditions derail any of long-term planning. We're supposed to be in it for the long term, right?
We're supposed to be in it for the long term. I had a client ask me the other day, well, what should I do about the election? Well, you're 45 years old. You're probably going to live for another 45 years. You have an investment plan for the next 45 years. You shouldn't be changing anything based on an election.
Okay. And as you just said, this is normal activity.
This is absolutely normal activity for the market to go up and down. The economy inhales and exhales, and that's just how things work, so people should get used to it.
And keep a long-term outlook. That's really your mantra.
They've got to keep a long-term outlook. It's so important that people have a plan, first of all, and then they have a long-term outlook. Now, the reason why most people can't do the right thing investing is because they have no plan. And because they have no plan, they can't think long-term. So they're reacting all the time. And that's why it's so important to understand what is a correction and what you should do as it relates to your own money.
And you have some advice. So what action steps can we take in a market correction?
And it's real simple. Be patient. Fight your emotions. That's so important. Stay diversified. Don't get greedy or don't get fearful. And if you feel comfortable, work with your financial advisor. If you have a financial advisor, they will be able to keep you from doing the wrong thing at the wrong time and stick with a plan.
All right. And just to feel a little bit better, you can understand, or there's a free offer here. There's Understanding Market Corrections, where we can do a little bit more than we were able to talk about here. This is a free offer. Everyone can just email you and your team, which is bettermoney@wfsb.com.
Yeah, and it's a great piece. It talks about what we just talked about, all the different things of market correction, but it gives people a little bit of peace of mind because it shows historically what's happened in bear markets and in really, really bad markets and in just correction markets.
All righty, so it's yours for free with just emailing. So Joel, thank you so much.
Thank you, Kara.
That's Better Money.